Hi, my name is Jason Hummel. Thanks for tuning in. I just came back from the Vancouver Gold show, which was attended by about 8,000 investors, 380 resource companies, and 50 speakers. This was the biggest show by Cambridge House by far. I gave 2 speeches, was on a panel discussion, and did 2 interviews. Now, I just took a year off from attending both shows, and so I decided to revise my old speech and focus on the most important, non-religious reasons to buy silver. So in a nutshell, here's what I presented and learned from the show. I write a free newsletter, silverstockreport.com, that goes out to about 37,000 opt-in subscribers. My subscriber rate's increasing at about 100 per day, or about 100% per year. I have about 850 paying subscribers who pay about $40 a month to look at my portfolio. I spend the subscription money on advertising to get the word out. Now, I carefully study feedback from my readers to help me find the best investments in the industry. In 2003, my portfolio was up about 300% in silver stocks. In 2004, I was up about another 100%. In 2005, I was up about 40%, and in 2006, my portfolio grew another 100%. That track record is about the best in the world for that time period, on par with the best funds in the business of gold, silver, and resource stocks. My overall view of silver has grown far more bullish since 1999, when I started investing in silver, and here's how my view has changed. To really understand silver, you first have to understand gold. And you don't understand gold unless you know what GATA knows. GATA is the Gold Antitrust Action Committee, and they've done the research to show that about 15,000 or more tons of about 30,000 tons of central bank gold has been leased into the gold market over the past 10 years, and this has depressed prices. I support GATA, and I've made a donation to their cause, and I refer to them often. But for more information, you should really order their DVD online at goldrush21.com. Should have attended their conference. That was great. But now I was attracted to silver because I thought I could make more money in silver than in gold, and I have. At first, I thought silver was merely cheap at $5 an ounce, thinking that the downside was limited, and that we had a good shot at silver repeating the performance in 1980 of $50 an ounce. But now I think $50 an ounce will be just the start, and here's why. In 1980, M3, the measure of money in the banks, was only 1.8 trillion, and today it's closer to 11.5 trillion. So comparable price for silver, adjusted for money creation inflation, would be $11.5 trillion divided by $1.8 trillion times $50 an ounce, which gives us a target price of $319 an ounce. But that's just the beginning. The reason why is that the bear market for silver did not last 25 years. It was worse than that. In reality, we are still in the bottom of a 600-year bear market for the value of silver. You can see a 600-year inflation-adjusted trend for silver in a graph on the internet at my website, silverstockreport.com. The primary reason for this trend is the declining use of silver as money around the world. But silver is money. It has the properties of money, and the words for silver and money are the same in many languages. As paper money fails, the return of monetary demand for gold, and especially silver, will be astronomical, and it will drive the value up tremendously. It's all about monetary demand. So next, I used to think that the price of silver would rise a lot due to the excessive paper futures market contract short selling on the NYMEX that would eventually result in runaway short covering and escalating prices, like back in the Hunt Brother days. I do believe that selling excessive paper contracts is manipulative in nature. However, today I believe that paper money that is supposed to be as good as gold or better than gold is the far greater manipulation. Perhaps it's 100 or even 1,000 times greater. Paper money was originally a receipt for gold or silver on deposit at a bank that you could redeem at any time. Futures contracts for gold and silver that expire, that is, by definition are even less honorable. So, if the first gold certificates were not honored, then how can today's contracts remain honorable? The point is that it is all about monetary demand and not futures contracts that will drive silver prices skyward. Finally, I used to think that silver would be a good investment because of the current supply and demand dynamics in the silver market, whereby more silver than is mined each year is consumed by industry, jewelry, and photography, which leaves no room for investment demand. But the nuances of current supply and demand say nothing about the upcoming and future monetary demand. The vast portion of the price and value change of silver will be mostly moved by monetary demand. So in sum, first, silver is not going to spike again to $50 an ounce. Instead, silver will roar past $300 an ounce due to monetary demand. Second, silver may well be manipulated due to NYMEX futures contracts. However, silver is manipulated far more because of the existence of paper money. And as paper money continues to fail and monetary demand for silver returns, silver's value will skyrocket. Third, silver will skyrocket not due to current supply and demand fundamentals, which are good enough, but due to the overwhelming monetary demand of the future. The trouble is that people today have a difficulty in understanding how monetary demand for silver can or will return. People have a difficult time envisioning what that will look like and what it would mean, both in terms of prices and values for silver. To help explain, let me explain compound interest, or exponential growth rates and decay rates, especially how they are often a function of size. You see, small things can grow really fast, but big things cannot grow nearly as fast. Acorns, tiny little acorns, can grow to big oak trees, but oak trees do not grow to the moon. Babies grow fast, but adults stop growing and will one day die. You see, silver is the small market. If there are about 4 billion ounces of silver in the world, meaning that only 10% of the 40 billion ounces of silver estimated to have been mined since the start of human history still remain, then the size of the silver market is only about $50 billion. But the Federal Reserve often adds $50 billion to the money supply in 1 week. So in contrast, the world paper money market is actually about 50 trillion in size, which is about 1,000 times bigger than the silver market. The paper money market is like a mature oak tree that cannot significantly grow any further, but is dying as branches rot and fall off. When paper money dies, the price of an ounce of silver or gold will both be beyond infinity dollars per ounce. This does not mean that gold or silver will become infinitely valuable, but rather dollars become worthless. It is impossible for any market to grow exponentially forever, but that is not what happens to the silver price as paper money dies. A very high dollar value for silver is really a reflection of the decay rate of paper money. After paper money fails, silver's value may well be up to 100 times or even 1,000 times greater than today, but probably not more than that, regardless of whether the last quoted price for silver was $1 million an ounce or $1 billion or $1 trillion. And so, when paper money fails, society will need a substitute, such as gold or silver. Monetary demand, therefore, will return and force silver's value much higher. As silver's dollar price, the price for silver, continues to gain 30% to 60% to 100% per year, more and more investors will be forced to take a look at silver to see what they have been missing. They will greedily seek after such rates of return. For capital to survive, it must. And as more and more people invest in gold, and especially silver, it will continue to push up the price more and more until paper money fails completely. People can't be satisfied with 5% returns in bonds if silver is paying 30 to 100% per year. How can paper money compete? Will they raise bond rates to 50%? And what happens when 50% more money is being created each year to pay bondholders? Wouldn't that cause an enormous inflation that would simply drive metal prices that much higher? You see, high interest rates also would cause a high bankruptcy rate, and in such a time of deflation due to bank bankruptcies, gold and silver, which can't default, would be highly sought after safe havens. As silver goes up, most people will discover most everything that I discovered about silver over the past 6 years. That it hit $50 an ounce in 1980, and that the inflation-adjusted price for silver is really over $300 an ounce today. Is silver money? Can silver be money again? Well, money is at least three things. It's a medium of exchange, it's a unit of account, and a store of value. Silver is my store of value. I'm storing my value in silver, and silver's been great to me. Not that silver cares about me or even knows my name, but because silver is, of course, an inanimate object. But silver has provided me with a rate of return, and the returns are outside of the banking system and are largely not really taxable, and silver is not really easily found or taken over by government. By the time I sell my silver, who knows what government will be in power, and who knows what the capital gains tax rates may be. So what should one buy, stocks or silver? I currently have about 11% of my portfolio in silver and about 85% in stocks, mostly silver stocks. I plan to increase my holdings of silver to about 20% very soon, within the next year, and perhaps up to 50% in silver as time goes on. I don't like the thought of having to move and store several tons of silver, but I'm lazy and I like to earn money the easy way. Recently, a website called silverstrategies.com posted the results and performance of many silver stocks as denominated in silver. About half the stocks underperformed silver and about half overperformed. I've done better than most, and I've outperformed silver in the last year. At the show, I disagreed with 3 other panelists on the topic of whether we should buy stocks of the major silver mining companies. Over a year ago, I predicted that the major silver companies would not outperform silver prices. So far, I've been mostly correct. I don't own any of the 6 major silver companies with market caps higher than $500 million. These are Silver Standard, Pan American, Apex Silver, Silver Wheaton, Hecla, and Coeur d'Alene. I think they're all overvalued. I take my profits in the form of silver bullion. Silver is my money. It's my unit of account. I feel I have gained only if the dollar value of my portfolio can buy me more ounces of silver, and I only truly gain if I actually go out and buy those extra ounces of silver. Silver today is as cheap as it was at $5 an ounce about 12 years ago. In 1995, M3 stood at about $4 trillion. Today, silver is at $13 an ounce, and M3 is at $11.5 trillion. So the silver price over the past 12 years has, on average, kept up with inflation. But today, we have serious price action. Today, silver's gains are outpacing the rate of money creation and inflation. Silver gained about 40% in 2006, and M3, money in the banks, went up by about 10%. Silver's gains will likely accelerate even faster, with continued volatility, of course. I expect silver prices to hit $20 to $25 an ounce in 2007. Afterwards, I expect maybe a drop to as low as $15 an ounce, quick drop before soaring yet again to new highs past $30 to $50 an ounce, perhaps in 2008. I really don't think it matters much what kind of silver you buy as long as you get some. Silver is not produced by anyone in the form or shape of the money of the future, which may be 1-gram coins, 2-gram coins, or 10th-ounce coins, who knows. Today it may cost 10% to remelt and refine your silver into the forms of the future. But when silver was money, 100 years ago, the smelting and minting costs were 1/2%. This is not because energy costs more today, it's because the price of silver is at least about 1/20th of the true value of what it should be. To get silver cheap, just get the most silver for your money at the least price, which is typically either 90% junk silver or silver rounds or 100-ounce bars, and take physical delivery of your silver. Get it from your local bullion dealer, your local coin shop, and store it in your own safe, the combination to which only you know. Only then do you truly control and own your silver. If you can afford to invest in silver, then you can afford to spend 1 to 10% of it on protection, whether a safe or home security system. To get started buying silver, take a look at my website. Look for the page Buying Bullion or findyourlocalcoinshop.com. So what did I learn at the Vancouver show? Many things. As my email list has tripled in the past year, I'm more well-known than I once was. At the show, I spoke to many friends and company managers, too many to list them all here. I ran after John McPherson of Canadian Zinc, a wonderful company that got to about 70 million ounces of silver in the ground. Now, they're frustrated, though, however, with the slow pace of permitting. And the company is also looking for acquisitions, since they do have about $35 million in cash, which is about half the market cap of the company. I also sought after John Versfeld of Cabo Drilling and another company called International Millennium. International Millennium, which is a company that now owns Cabo's cobalt silver properties. And they also own many other silver properties, and International Millennium may get a listing in February. John was wondering if I was going to sell my shares in International Millennium, perhaps when it becomes free trading soon. I do own about 3% of the company. So I told him that I originally bought Cabo because I was interested in the silver properties, and that it was up to him to convince me to hold on. My way of just encouraging him to provide value. I also ran into a good friend, Don, the man who spent nearly 4 months convincing me to look into Canadian Zinc back in 2003. We sat down to chat, but we didn't have nearly enough time. I ran into Gene Laraby of Coronado, The symbol there is CRD on the Venture Exchange. The market cap is only about $15 million. I learned that they have a mining permit, and they are dealing with water in their decline ramp down to the high-grade zone, where they hit 60% copper, which is the highest-grade copper in the world, almost the highest-grade copper in the world, and they may have resources worth about $200 million. Not bad for such a small market cap. I had dinner also with Vance Lober, who's been promoting U.S. silver. The symbol there is USA on the Venture Exchange. The market cap is about $200 million, and they recently acquired the Galena mine in Coeur d'Alene, which is the former flagship mine of Coeur d'Alene Mining Company. I also had dinner with the men of Aryan Silver, which is a market cap of around $40 million, and they're hoping to find up to about 100 million ounces of high-grade silver in Mexico. I asked nearly every newsletter writer what they thought of Noront. The symbol there is NOT, N-O-T, trading on the Venture Exchange. It's about an 80 to 100 million market cap company that they hit about 30 to 50 ounces of gold per ton. 30 to 50 ounces of gold per ton over 15 feet in early December this last year. A couple of months ago, which is the highest grade intercept that I've ever heard of. Most of the newsletter writers had not heard of it, and the two that did, they didn't even yet buy any shares. I also asked my peers what they thought of Pacifica. Pacifica, the symbol is PAX, trading on the Venture Exchange in Canada. It's a $100 million company, and they have maybe $80 to $100 billion of zinc at 5% grade, which is perhaps the largest mining project on Earth. Most hadn't even heard of Pacifica either. I was walking past Kathy Fong of Silvercorp. Silvercorp's an $800 million market cap company, and they invited me to lunch last Tuesday. I learned of New Pacific, which is a $50 million market cap company. The symbol there is NUX. That's another company in development by the same management team, but it's not focused on silver, but rather on gold. Now, I made a point at the show to attend the workshop by Dennis Gartman. Dennis Gartman appeared to have a free market perspective, yet he has scorned GATA's work. Dennis's main points in his speech were that investors ought to buy things moving up and sell things moving down. I suppose he is a momentum trader then, and I'm a value trader, so I guess I bought silver first. We might be buying silver later after it continues to go up. His main point is that the trade deficit does not matter, since the government measures exports by Microsoft in terms of the price per pound of plastic, and not by the value of the software. We export knowledge was his theme. Dennis also does not trust the GDP growth numbers at 3%, saying that people pay taxes on what they've actually earned, which shows growth more like 10%. He also did not acknowledge or mention that money creation also stands at about 10%. At this show, this was the first time that I heard John Embry speak at one of the Cambridge House shows. But John Embry, he runs one of the best performing metals funds in the industry. He was very articulate, as he was at GATA's Gold Rush 21 conference, and he endorsed GATA's work. I heard that John, his fund, owns 10% of about 100 resource companies in the industry, which is a virtual monopoly on resource exploration and emerging production. John read a fact-filled, well-organized speech that was well-received. I noted that at this conference, there was far more awareness and respect for GATA's work than in prior years. John also ended his speech by noting that he was more bullish on silver, more excited on silver than he was on gold. On a panel discussion, there was a bit of a debate on whether the China boom will continue, and whether it is sustainable. Frank Veneroso said that he predicted that many third world booms would collapse. And he was right about that, so he feels that China's boom now will collapse, and that China's banks are overextended. On the other hand, China's banks have seen fresh capital infusions from Wall Street, and can draw on China's $1 trillion in foreign exchange reserves. Dennis Gartman, who charges $500 a month for his newsletter, had the opposite view, and that the rising middle class in China will make many people millionaires. His view was that one should go to China and open up, let's say, a plumbing distributorship in perhaps the 13th largest city in China, because those were the businesses that made the most money in America's boom times. My own view is that China has returned economic freedom to a large degree to its people, who are now more free than we are in the United States in many respects due to deregulation and free trade. My own view is that freedom is generally quite sustainable. Furthermore, when people are starting out earning $300 a year to $500, maybe $800 a year, they can grow such incomes at 100%, or that's, let's say, at 10% per year at China's current growth rates for a long, long time, for far more years than the Dow can grow at such rates, and that this will thus fuel the commodities boom for perhaps decades to come. I'm not a doom and gloomer. I believe that mankind is progressing through increased free trade, increasing economic freedom, and increasing knowledge. More newsletter writers and investors seem to understand the Gaddis story on gold lending and the specific fundamentals that make silver a much better investment. So now you know far more than you need to know about silver, yet many of you have not yet taken action. It's not the knowledge you have, it's whether you act on it that's the most important. So take action and get some silver today. As a disclaimer, I own silver, Canadian zinc, International Millennium, Coronado, USA Silver, Aryan Silver, Noront, Pacifica, and New Pacific, and no company has paid me to make this presentation. Please don't email me for specific stock picking advice. Instead, if you want to see which stocks I own the most of in relation to the holdings of silver in my own portfolio, you can make purchase. So look at my portfolio at my website at silverstockreport.com. Thank you very much.